Sorry, forgot to unmute. Assalamualaikum and good afternoon, everyone. Thank you for joining us for this webinar today. I'm Farouz Nada, the Executive Director of Global Compact Network Malaysia. On behalf of my colleagues from Thailand, Indonesia, Sri Lanka, Singapore, and Philippines, we welcome you to this exciting webinar that's featuring an exciting speaker, Jenny Davis Peccoud from Bain & Company. Without further ado, let me introduce our moderator of the day, Professor Dr. Mohan, who is from Nottingham University Business School, and who will take us through the session together with Jenny. Dr. Mohan, over to you.
Thank you, Farouz. Again, a lovely opportunity to hear an interesting speaker. Good afternoon, everybody, and good wishes to all who are observing the fast for Ramzan this season, wherever you are. It's such a pleasure, privilege to be along with Farouz on this platform and to introduce Jenny. We are always envious of people who have a global span in their life, personally and officially, and Jenny is one of those people. With an education in the US, in the East Coast, having lived and been in the West Coast, and then she moved to England, and then now based in Netherlands with Bain. What is more interesting and why I was keen is that you've been 27 years with Bain. In today's world, not many people stay so long with organizations. So clearly it's a good organization to work for, or you're a wonderful person in terms of engaging with the company. But either way, things that I'm sure are going to come out in your talk when you speak with experience. While having a broad experience in terms of management issues, including change management, supply chains, it was interesting to note that you founded the corporate responsibility and sustainability practice, and you do research at Bain at that. So this summarizes in very few words, I realize, not doing full justice, but nevertheless gives a flavor of the background of our speaker today. Jenny, before I say over to you, everybody, as usual, it's become the norm now in webinars to have about 30 minutes plus or minus of the session with the speaker, and after which there is a chat box open for asking the questions, and I'll be your moderator for the day. Jenny, over to you, and looking forward eagerly to hear about the talk.
Great, thank you. I hope everybody can see my screen. Thanks very much, firstly, to the UN Global Compact for inviting me onto the webinar today, and Dr. Mohan for your facilitation. Jenny Davis Peccoud, a partner with Bain. I'm based in Amsterdam. Have been with Bain 27 years across most of that in Europe, between London for 20 years and Amsterdam now for just over 2.5. I founded and now lead our global practice on sustainability and corporate responsibility. I started that about 10 years ago and have seen how this area has become more and more important and prominent over time, both in the world at large and for companies. We entered 2020 on a high. At Davos, the theme was all around stakeholders for a cohesive and sustainable world. And it felt like sustainability was the star of the year and the coming decade. And then boom, COVID-19 comes and hits us. And a lot of my clients were asking, well, what are the implications for sustainability from the current through the current pandemic? And so that's what I'd like to share a bit with you today. Now, opinions really differ on whether the effects of the crisis are going to slow sustainability or indeed give it a boost. And you can see the kinds of headlines on the left that things are going to slow, attention is getting diverted, the fight could prove fatal for climate change. But you see an equal number of headlines on the right where actually people are talking about a green recovery. It's time to rescue the planet, particularly when you see some of the headlines that connect the emergence of diseases like COVID to environmental degradation. That actually raises some big questions about what we're doing with the planet and with our societies. Now, in some ways, there are certainly headwinds that we see, there are challenges that are coming for sustainability because of the global crisis. Firstly is around changing economics of sustainability solutions. Both the COVID crisis, but also the crazy oil price wars that kicked off right around the same time and have then been exacerbated by the impacts of the crisis, actually change the economic equation of sustainability initiatives. Everything from renewable energy to bioplastics may start to look less compelling in the face of a very low oil price. And obviously, unpredictable horizons mean that some of the economics around longer term solutions may be less palatable for organizations. We also see some inertia of negative trends hanging around. The fight against plastic waste, which had taken on quite some momentum, has actually hit a bit of a speed bump when actually you look either at all of the medical equipment, the protective equipment, much of which is plastic-based, or indeed the celebration of plastic as a safe and hygienic product, which means that there may be a resurgence of that. A diversion of attention is not at all surprising when executives are fighting for the survival of their companies. A number of my clients have seen their revenues drop by almost 90%, 90%. When that's happening, actually your attention is getting focused elsewhere. But it isn't just corporate executives' attention. Actually, activists, regulators, and other stakeholders are also finding their attention diverted during this time of crisis. I can only imagine what Earth Day would have been like if we had all been able to get out and gather, as opposed to the online lockdown that we were all experiencing. And of course, lack of capital. As companies are in a difficult cash position, at least in the short term, anything not viewed as critical to survival could be deemed unnecessary. And albeit 10 years ago, when sustainability was at a very different stage of development, what was then known as CSR, corporate social responsibility, those budgets took about a 30% cut after the last financial crisis. So certainly some headwinds or challenges for sustainability that we're seeing. But of course, there are tailwinds, things that actually are propelling sustainability further and faster. Let me start with investor support. There are some challenges for investors as well, who actually are focusing on nearer term priorities of the performance of their assets. But actually, there's quite some good news for investors considering ESG. In fact, ESG-linked securities outperformed the market by about 7% over the period from December to today, or indeed from February to today. And if you think about the top quartile of fund performance, that's the top 25% of companies, a full 44% of that are funds related to ESG. So they're outperforming in terms of financial returns. The second tailwind is purpose. Now, purpose actually was another one of those things, like sustainability, that had been on the up as we were going into this crisis, and which is only being reinforced through the crisis. What we've seen is that companies with a strong purpose are more attractive to employees, and brands with a purpose are more attractive to consumers than other brands. In fact, purpose-led brands outgrow other brands by almost 6 times. And actually, through the crisis, consumers and others are asking themselves, well, what is the purpose of this company, of this product? Is my life really better off? And is the world really better off with this or not? And so that's also reinforcing some of the tailwinds. A number of the particular policies or topic areas for sustainability have also been supported through the crisis. Health and wellness is probably the number one, where consumers are refocusing on things that are healthy for themselves, whether that's food or exercise or other things, which actually can help us tackle some of the pressing health challenges that exist in the world. There could be workplace policies as people focus on mental health and care for more vulnerable employees, or indeed climate change as science starts to become rehabilitated and there's a greater focus on science and an understanding of some of these more global trends. And of course, another tailwind is a redefined relationship between government and the stakeholders, where actually everyone is having to work together to solve this crisis, which actually can portend positively for needing to work together to solve some of the sustainability crises, ranging from climate change to biodiversity loss, or indeed the topic of inequality. Now, so where do we go from here? Well, some governments are calling for a green recovery, linking their stimulus packages to that. It's a bit of a mixed picture. So far, you've seen some concrete actions. If you've been watching the government of France, asking Air France to cut their domestic routes and shift that domestic traffic onto the train. But actually, vast swathes of stimulus money is going into sectors which are not necessarily yet fully green, but some positive signals from the government side of things. International institutions are supportive of a green recovery. The World Economic Forum tendered 6 key principles to consider during this crisis and recovery, with continuing sustainability efforts unabated as one of those 6. And that was signed by the World Economic Forum leadership plus 140 members. And of course, you see the IMF and the United Nations affirming the same. And finally, many business leaders are also reaffirming their commitment. I was fascinated to watch the string of net zero commitments from big companies ranging from the oil giants to airlines and even financial institutions. You can see comments from the likes of the CEO of Unilever, the CEO of Ahold Delhaize, 2 companies based here in my home country, actually recommitting to sustainability and actually calling for action and leadership across the business community. The global CEO of BNP Paribas actually encouraged almost 50 or 60 French companies to join him in calling for a shift to more sustainability. But at the end of the day, to some degree, it doesn't actually matter the headwinds, the tailwinds, which side is going to win out. Because actually, what I think COVID has shown us is that these disruptions can come from anywhere, regardless of our assessment of whether headwinds or tailwinds are going to win. And that's why COVID can actually serve as a dress rehearsal for some of the challenges that we'll see, for example, from climate change. Some of the parallels, I think, in COVID, we've seen significant supply chain disruption that actually, albeit more slow moving, is clearly going to be a big impact of the climate crisis, whether that's entire productive zones becoming less productive through temperature rises or water constraints, or indeed through bushfires or droughts or other issues that disrupt supply chains. We've seen external collaboration between companies and governments for COVID, and clearly that is going to be the same as we look to the climate crisis, the Paris Agreement being the most notable of those, but others following shortly around biodiversity and other topics. And finally, the need to consider business retooling to remain relevant and profitable. Now for COVID, at least in the short term, that's meant actually quite abrupt changes and repurposing, but also for the climate crisis, it will actually call for potentially full business model transformation. And so if you consider this as a dress rehearsal for climate change, what might that actually mean? Well, it means for companies pushing beyond prediction to actually considering adaptation and resilience. Now, it's not like corporates didn't have a risk register that said a pandemic was a possible risk. It's not like they didn't predict that that could be a potential outcome. The issue is really not about prediction, and certainly for climate change, it's not about predicting which of these is going to happen, or indeed what the effects will be based on different trajectories. The real call for the dress rehearsal is actually to move beyond prediction to think about adaptation and resilience, and actually figuring out how you can adapt quickly when these things arise. And that actually is helping your organization be much more agile, stress testing how these some of these changes can impact, and planning out what responses might be. And indeed resilient and understanding actually, is the business currently resilient to unforeseen shocks? A lot of people thought that their call center networks were resilient because they actually had call centers in different countries. They didn't ask themselves, well, what if the people can't go to work? Is our call center resilient in that instance? And that's why this time is such an important dress rehearsal, because it allows companies to understand much more deeply what resilience might actually mean for some of their most critical supply chains and operational activities. So what is it that companies are doing around sustainability in the COVID era? For us, it comes down to two things. It's acting now to protect and run the business, but planning now to change the business for the future. And I'll walk through some examples of each one of these. Now, I was saying to Mohan that it feels like acting now was probably relevant about 2 months ago, given how the crisis has evolved. But it's still worth pausing for a few minutes on what is it that companies have done when it comes to acting now in the crisis. The first thing that most companies went to was ensuring that they would treat their employees fairly. Target, a big US retailer, increased wages, offered paid leave for employees at risk of contracting the virus, created a fund to support affected employees. Starbucks accelerated the rollout of a mental health care package that they had already in the works to help their employees and families who were going through the stress of Corona. One of the global insurance companies actually went even further and created the first ever worldwide insurance policy for their 70,000 employees to cover them in case of COVID or COVID-related healthcare issues. The second thing then, having thought about employees, is thinking about customers and suppliers and doing right by them, whether that's providing financing to smaller businesses through the value chain, or indeed helping consumers who are struggling with their bills due to the financial effects of the virus. And you all will have read stories about companies refusing to give cash payment, offering vouchers instead, really doing damage to their reputations, because actually those are made or broken in these kinds of times. Number three, around helping the broader community, is clearly something that is a response to a crisis, whether you're changing your factory from making vacuum cleaners to ventilators, or from making alcohol to making hand sanitizer, or indeed perfume to hand sanitizer. Who knew that those assets would be that flexible? But actually, that was really something that many companies wanted to do, to just reinforce that sense of purpose for their employees and for their consumers as they were going through the crisis. And finally, integrating a sustainability lens into actions that you take in the heart of the crisis. So tech companies, for example, have really increased their efforts to fight false and misleading information about the virus on their platforms, going far further than actually they had done previously, whether it came to topics ranging from climate change or indeed political issues. And so if you have to make decisions about which factories that you might need to take offline, or which resources to retire, for example, actually doing that with a sustainability lens can be quite helpful as you're acting in the short term of the crisis. But let's turn to plan now, because that really is where we are more in the cycle. And there's really four angles that you can consider as you plan for a sustainable future coming out of off the back of this crisis. Firstly, it's maintaining the positive actions that you've taken today, which can support resilience in a more sustainable future. Some of that is around the sense of corporate purpose. It is easy to do that, it is easier to do that in a crisis, and harder to do that when that sense of crisis recedes. But companies that actually maintain the sense of purpose, the sense that actually the world is better off with them in it than without it, because they're playing a critical contributing role to helping the world in some kind of way beyond just their products, is actually quite important. Some of those examples that we saw about those workplace policies shifting, or tech companies changing their focus on combating false information, actually are things that they could be considering. How do they want to carry those forward? You'll actually see in this category companies making real decisions about, for example, which assets they're going to bring back online. In the utilities space, this may be an opportunity to retire some of the dirtier assets that actually also cost more to run now than some of the renewable assets. Even the airlines, as they are considering a future with potentially less flying, are thinking about which aircraft actually should they be bringing back on versus retiring. And thinking that, for example, the 747s may be ones that would not come back online, which would be positive for their return to financial stability, but also positive for CO2 emissions from the airline industry. The second thing to consider as you plan now is around M&A, because what we see during crises is that stronger companies with good balance sheets actually find that downturns and crises are a good opportunity to fill in some of the critical capabilities that they may be lacking. And sustainability is certainly one of those areas where startups and smaller companies are bringing quite a lot to larger companies. And so M&A, and considering how you would want to adjust your M&A strategy through this time to help support a more sustainable recovery is a very valid consideration. And you can see some examples there, both from the last crisis where we saw some a grid tech company in the US, for example, bringing in ones that would help their positions, or indeed, even in this one, an oil company, Neste, which is trying to become a leader in bio feedstocks, actually completing acquisitions to help with that strategy. Now, number 3, reviewing risk assessments based on the crisis. Actually, this whole point about it's not prediction, it's adaptation and resilience is actually quite important. And this is the opportunity to go back through all of that risk planning, if you will, and actually see, if we think about things from a sustainability lens, what is it that actually we need to be doing differently? The Task Force on Climate-Related Financial Disclosures, which was gathering traction before the crisis, is continuing its push to become more and more anchored in large public company reporting. And so understanding what are the risks embedded in your business from a climate perspective, and therefore what really are you going to be doing differently is important. An example of that is carbon pricing. Now, I've talked to a range of companies, some of whom say that their carbon price that they use for long-term capital planning is kind of in the high single digits. I've talked to others who say they will assume a price of carbon of $150 to $200 a ton for their long-term capital planning, because they believe that actually that future is realistic enough that they don't want to be sinking large amounts of capital into programs without understanding if it's going to be resilient to that level of carbon pricing. And that's the kind of review that companies should be doing now, with COVID as a dress rehearsal, to explore where the risks might sit in their business from climate change or other sustainability issues, and how they should be reacting. But sustainability isn't all about risk. There's actually new sustainability-driven opportunities that are coming from this. And you can use the COVID crisis as a means to identify some of those opportunities. For companies like food and beverage, the whole shift or the increasing focus of consumers on health actually will provide a fantastic upside for companies that can get out ahead and start adjusting their formulations and their product lineups to take advantage of that. That would be the same in consumer health and other kinds of opportunities. There's also a shift when people from the COVID crisis are looking for greater transparency in their supply chains. And so those companies that can actually get ahead and really provide supply chain transparency and understanding of where the product has come from, how it's been either grown or produced, and how it's been processed along the way, actually are going to be in a good position to win competitively as the crisis shifts from crisis mode to recovery mode. And so certainly exploring the risks, but very clearly also looking at the upside opportunities. So just as we come up to the end of my comments, I'll look forward to your questions. A couple of key messages. While we may be certain that there will be some near-term setbacks, headwinds for sustainability, overall, we expect the sustainability agenda to emerge even stronger after the crisis. And companies will emerge stronger if they both act now and plan now for a sustainable future, particularly because COVID-19 is a dress rehearsal. And viewing it through that lens, not to address the problem of prediction, but to address the challenges of resilience and adaptation, is really the opportunity that companies have now to come out of this and into a more sustainable future, both for the world as well as for their businesses as a whole. So I'll end my comments there, and we'll look forward to your questions and comments.
Lovely. Thank you, Jenny. Beautifully summarized. And the two words being adaptation and being resilient. There are already quite a few questions, and I'm going to take the questions based on two things. One, my interest a little bit, I have the opportunity, but also the number of likes that some of the questions are getting. So there's the first question, not based on likes, but the very first question. A few comments about ESG based issues or ESG based investments and trends in Southeast Asia. How familiar would you be? And would you make a few comments around that?
Yeah, indeed. So ESG, environmental, social, and governance considerations, is a very big topic for investors. I think you heard my comments around the performance of ESG related companies and funds through the financial turbulence that we saw in the past couple of months. And it's very much a trend that we're seeing play out in Asia as well as on the global stage. And so the amount of money that has been coming into ESG related funds across the region, and that's actually both for organizations, kind of sovereign wealth funds or sovereign investment funds like a Temasek or a Khazanah, but also the private equity funds and other institutional investors, whether that might be the banks or insurance companies. And everyone is looking at this. There's a couple of different ways that it's manifesting itself. The first one is people looking to embed ESG considerations into the way that they manage their portfolios. And that's everything from the due diligence of the investments that they select to then a whole different range of ways to engage with their investments once they've done it. But we're also seeing people do two other things. One is embed ESG considerations into their overall fund strategy. So that's looking at how ESG should influence asset allocation, for example, across different sectors. And then also a number are considering specific impact funds and actually starting up funds like the TPG Rise Fund or the Bain Capital Double Impact Fund, setting up specific funds to take advantage of that. I think the last thing I'll say on this topic is that what we're starting to see more and more is investors taking an issue-specific look. For example, climate change and carbon emissions, and really trying to ensure the resilience of their portfolios in the face of some of the bigger kind of marquee issues like climate change being the first one that's coming to the fore.
Well, it nicely, your sentence nicely leads to the second part of the question. Apart from issue-based investments, any specific sectors, obviously health and so on, but any other sectors that you see rising in the dashboards of the ESG fraternity?
Yeah, so I mean, obviously things like renewables is coming. I should say I'm not an investment professional. You should not be rushing out and putting your money to work off the back of my comments. But renewables clearly is one of those. What we're seeing, though, which is actually the same, it's no different for profitability, is that any industry, however profitable or unprofitable on average, always has a number of winners in it when it comes to outsized profits. And the same, I believe, is going to be true for sustainability. And actually, some of the agriculture companies, for example, some will struggle with some of the challenges around biodiversity and climate change that's embedded in those businesses. But others actually will perform well, either on getting on top of those issues in their core businesses, or indeed creating what we would call an engine 2 business, for example, moving more towards nature-based solutions and helping larger emitters find a way to help offset some of the emissions that they can't get rid of for their business. So I think there could be some sectors, but indeed keep an eye out for some of those specific players in each of the sectors.
Lovely. There is a very popular question around the logistics sector. The COVID crisis is obviously making us very reliant on logistics, particularly online shopping. What are ways you think logistics businesses should adopt more sustainable practices? Any interesting cases that Bain might have come across? I mean, or as you and Bain might have come across? Do you think there'll be bigger players in the carbon reduction agenda? Or do you see any companies voicing out this issue?
So I can answer that on two levels. I think there's the kind of global supply chain logistics, and then there's the last mile logistics for the increase in online shopping. On the kind of global supply chain logistics, I think what we may see is companies reevaluating the length of their supply chains. And therefore changing some of the logistics flows that we will have seen. As companies are considering what resilience and adaptability really means, having less of a reliance on kind of far-flung single market supply bases is something that companies will look at, which actually may change the shape of global logistics, potentially shortening the supply chains and helping, therefore, with issues such as carbon emissions. When it comes to the kind of last mile and online shopping, I will say that this is something I've been worrying about, because some of the research that we have done suggests that depending on the basket size and the kind of density of the density of the network, online shopping can actually be worse, if you will, for things like carbon emissions and plastic and packaging use. And so what I would say is that the online delivery companies, I think, are going to face increasing pressure to really address some of those issues in how they operate. And I'm sure you've all had this experience where you order something for delivery to your home, and it comes in a box, wrapped in plastic, wrapped in another box with some more plastic around it, and just the sheer volume of packaging that comes through those channels is quite extensive. Our research showed that actually a physical trip to the store was the most carbon efficient, pretty much under any circumstance, if it was chained with other trips that you were making, like a run to school or a run to work. Now, with that changing, I think we'll have to see how logistics companies deal with that, either shifting to electric vehicles as an example, changing the way that they do their own kind of logistics setups, increasing route density, which means that you can actually deliver to more people with a single run, and also looking at the issues around both primary and secondary packaging, I think will be important. And some of the things that we saw, for example, with Amazon before the crisis hit, as they were, the employees were pushing very hard to ensure that Amazon was stepping up to its environmental responsibilities. I think those pressures will not go away, and they'll just be extended across the even greater volumes.
We're jumping to a slightly different different type of question now, Jenny. This is based on popularity. I'm going to read it out, and we'll moderate the words a little bit. With the crisis, stakeholders and financiers are more interested in immediate financial returns than looking at things sustainably. How would you advise these groups moving forward? Or perhaps, how do you think these financiers are reacting in your experience?
Yeah, so there was a very interesting article, I think it was in the FT recently, that read one way. It could say that investors were walking away from ESG considerations. And of course, as with companies, there is a need for financial sustainability to have pride of place, because if you don't exist because you've gone out of business, then all of your intentions around sustainability to some degree would come to naught. So I think having a clear view of financials is a very healthy reflex. But if you kind of kept reading in that article, what you would have seen is actually there was an ongoing and underlying commitment to ESG, that they didn't say, well, we're going to focus on financials for the short term and then keep focusing on that. They actually said that ESG considerations would continue to be important. I guess the thing that I would encourage companies and investors to do, though, is really challenge themselves whether there's a trade-off, even in the immediate term. And so we saw some of those statistics that ESG-related funds performed more strongly than non-ESG funds and companies. I think you can also find there will be a whole, so that's on the investor side. On the company side, I think companies will find that there's a whole swathe of actions that they can take that actually is positive for the finances and positive for sustainability. But somehow those reflexes are not yet built in to how companies are evaluating what they do. And so I guess my advice would be, even in the short term, just expand the way that you're evaluating those activities. I had a financier ask me once, why should I care more about $1 million of cost reduction that comes through a sustainability focus than $1 million cost reduction that comes just from us figuring out how we cut $1 million? And the answer clearly is that actually the $1 million cost reduction that helps enhance your sustainability actually improves you for the longer term as well. And I will say I hadn't quite expected a positive reaction from that hard-nosed investor, but he actually said, you know, you're right. Actually, when you think about it that way, it's not just that savings in the short term, it's buying the strength and resilience into the long term, which I think companies would benefit from integrating into their decisions.
Right. I'm choosing a question in the construction sector, Jenny. There's a question around the industry's situation in Malaysia, which is very labor intensive and dependent on foreign workers and work progress, and there'll be no revenue without these issues. And construction industry is supposed to be more profit oriented and relatively less interested in sustainability. How do you see these companies adapting or adopting sustainability practices better and come out of this pandemic crisis? Any encouragements to these companies' cases?
Yeah, so I haven't spent much time thinking about the construction sector myself. I think one of the things that we are seeing, though, is that as with digital, where digital was impacting certain sectors faster than others, but it was coming to all sectors over time. I think things like the construction sector will actually find they may be slightly behind on the curve when it comes to the impact of sustainability, but it's coming. And so companies in that sector really need to make sure that they're thinking about those implications. And it's coming in a couple of different ways. I don't know particularly for Asia, but firstly, for whether it's cement or steel companies, for example, actually getting much more serious about CO2 emissions and embracing whatever it is that they can do to within the current kind of technical constraints, if you will, to tackle CO2 emissions is quite important. And so you are seeing more construction materials companies setting stretch targets, science-based targets when it comes to CO2 emissions, for example. The other thing that we see is companies needing to keep tabs on what's going on with their customers and consumers. And this is both in Western Europe, but as well as in Asia, as some of the commissioners of whether it's large-scale residential developments or indeed new cities are actually turning more towards kind of green city design. And so construction companies, whether that's the overall architects or indeed the builders, are needing to figure out how they can actually deliver against that. And that's bringing in a whole new set of capabilities, for example, around how do you think about energy generation as part of your design of your buildings or city? How do you think about creating smart buildings that actually can handle waste, things that actually bring nature back into a built environment in a very different way. And we are seeing this actually very much even throughout Asia, because there's so much construction going on of new build, which is the easiest time to put this in. I think the last thing I'll say on this one is that it does actually point the way to something that companies are starting to think more about, is what is the definition of sustainability? Quite often people have started with an environmental definition, possibly then considering things like human rights or worker rights. But the whole topic, what we're seeing through the pandemic, is that the whole topic of inequality is one that is coming much more to the fore, both in the kind of public discourse, but also for companies. And whether that's the inequality in the US of kind of all the lower paid workers who can get laid off quite easily, the inequality of ethnic minorities and susceptibility to mortality through the virus, or indeed some of the questions of inequality in the supply chains and worker base. I think that's going to be one of those topics that is going to gain prominence. And so those companies that are reliant on kind of low paid, low skilled workforces, I think will find themselves not immune to having to think more carefully about what they do with that population.
Very nice. That sort of answers another question that I was about to pick. That would you see COVID-19 or a pandemic giving inequality address Rehearsal once the world reverts to business as usual?
Yeah, I certainly think so. I think there was an interesting book that was published a couple of years ago that essentially said, looking back through recorded human history of like thousands of years, the only thing that had ever made a meaningful dent in inequality was death or war. Now, I think we would obviously hope that we can tackle some of the more fundamentals of inequality that are emerging without having to resort to that extreme. You have seen some, and this is where the green recovery, with green probably not being the right word, but the kind of green and equitable recovery could play such an important role if political leaders and those who can help hold them to account can actually rise to the occasion. That is one of the examples that was counter to his thesis, was the Great Depression and the return to the New Deal that was unfurled, that actually helped both the economic recovery of the US at that time, but also the increase in inequality in the US society through that. And that's why I think it's so important, the recovery approaches that governments put in place, because it can have an impact on sustainability, the natural world, if you will, but certainly can have a big impact on inequality, and whether that persists or whether that can actually be addressed.
Jenny, thank you for answering without even taking a breath, but there's quite a few questions, a little bit of a rapid fire.
Very
so
good.
With me. So there's another question on a point that you raised earlier. This is the issue of measuring impact. So the question is, any new indicators or any indicators that are being amplified because of this dress rehearsal or the COVID-19 situation?
I certainly don't think we need any new indicators. The problem is really that we have far too many indicators. I wouldn't see that from the kind of COVID necessarily, but there has been, even at Davos before the crisis, there was an effort brokered by Bank of America with the big four accounting firms to try to come to a more kind of common set, if you will, of measures. That I think is going to be the most, whether it's that set or some other set, having a smaller set of measures that become a bit more standard, I think is going to be probably quite important. I think the TCFD is going to be another big push towards that in terms of providing transparency around these topics. As I've been digging into companies' targets, for example, it's just amazing how even on something like CO2 emissions, there's probably 500 million different ways that you can actually measure that. And so I think this is going to, and some of the articles we've seen around ESG investors, actually, ESG is getting a lot of attention now because of its outperformance, but actually investors are confused as well, actually, of what should we be measuring. So I think this will give a boost, not because of COVID itself, but actually it will indicate the need to get a grip on the measures very much more so than the kind of cottage industry that we have today.
Right. There are two categories of questions, one around unemployment. I'm going to come to that now. The global unemployment will be a major issue for governments to quickly address. So what are some examples of government responses that ties job creation with advancing sustainability is from one of the participants in this session. The concern he or she has is that if companies are in a hurry or governments are in a hurry to get the unemployment up and put workers back on jobs, would it help or have some detrimental effect on sustainability goals?
Yeah, so I probably don't know enough about what's going on in each particular kind of nation or region in terms of unemployment. I do think there is a risk that if people just try to kind of, the assumption is, the very easy assumption is the best way to have the economy recover is to get back to what we were doing before. And I think trick, for people and policymakers is to understand that actually you might be able to do that even as effectively or more effectively by helping shift to a more sustainable economy. I think the example that's often tendered is the renewable sector, that actually you could create jobs by putting people back to work in the coal sector, or you could create jobs by putting people to work in the renewable sector. And I think there's more jobs actually in the US, for example, by quite a stretch in the renewable sector, that actually that's really where you can focus. And so finding that kind of, as a consultant, we love 2x2s, finding that magic 2x2, that quadrant, which actually is good for employment and good for sustainability, is really where I think we should be thinking.
Great. A few questions on the supply chain. Number one, how do you think you can mobilize capital to the least protected and vulnerable suppliers? You can answer that, yeah.
Yeah, that's a tricky one. I think obviously part of the government's role is to help ensure that the kind of robustness of the economy is not fully undermined. Small and medium businesses are hugely important in pretty much every sector, and so targeting the stimulus money, if you will, towards those is one effort that I've seen companies making. Now, obviously, I'm sure many of you will have followed the ups and downs of the US attempt to help direct funding to small and medium businesses that actually then went in the hands of some very large businesses. So I think that can serve as a bit of a cautionary tale for other governments who are looking to architect their programs. Now, of course, the part of what we should be thinking about is what is the right set of criteria on which to help drive a bailout and support. I would argue that bringing sustainability considerations into that would be helpful, and so I think the as governments look to develop their stimulus conditions, having both what kinds of businesses in terms of size and scale, but also then what is it that those businesses are doing and how are they operating, I think would be an important criterion.
Quite a few questions, but I'll pick one that we've not asked on digitization. There's a few questions. Is that something you think has a strong correlation for sustainability, or like the logistics case, could it have some sort of a different kind of effect?
So I do think digital will have play quite a big role actually in helping drive sustainability, and that is going to be in everything from using sensors to identify where you've got methane leaks, for example, and being able to drive preventative maintenance. There's quite a lot of interesting things around helping remote tracking, even of things like labor conditions. So it's not just around environmental considerations. And so I do think that digital is going to play a role. Of the most obvious issue with digital is some of the environmental impacts that it itself has. All those servers generating lots of using lots of electricity and generating a lot of CO2. The trickier side is really around its impact on long-term employment. And obviously there are concerns around automation and the replacing of workers, and we do see that actually they're depending on the forecast, actually you can see unlike other periods with kind of technology advances, that actually digital could be at a risk of front running, if you will, the ability of the economy to create new jobs that get replaced. And so I do think that there's a set of considerations for the government, obviously, around how to handle some of those topics through education and retraining and others. But companies as well need to think about that as well as they progress along their digitization and automation agendas. These issues around what is the impact on workers and the ability of those workers to retrain or find, be reemployable, I think is going to become more and more of a concern for the corporates as well, that they'll need to tackle.
If you're okay, I'll indulge one more question and seek it from you. Is that all right, Jenny?
Make it a good one.
It's from the audience, right? There's a mention of nature-based solutions. Would this have implications towards lower investments or CapEx solutions on sustainability? Is one of the audience's question.
Yeah, look, I think nature-based solutions are an interesting part of the solution towards the kind of global climate crisis. It can't be the only solution, actually. You can't offset your way to sustainability if you're some of the big emitters. But I do think that actually that will play a dual benefit, both of helping the carbon emissions as well as helping nature, which is again one of those issues that's coming quickly up the agenda. And so we are starting to see more capital flowing into that, whether that's through some of the oil and gas players who are using it for their own offsetting, or indeed some of the ag or forestry players who are seeing that as an opportunity to create a kind of a second revenue stream. And I think that probably what needs to happen a little bit more there is around the formalization of some of the carbon markets and the price on carbon. I think most of the nature-based solutions today are going towards the voluntary offsetting schemes, and the returns can be potentially quite variable. So some of that, some more kind of structural changes in the market may also help over time.
We're 3:58, Jenny, and thank you again, almost without a breath. You've taken all the questions. I want to end with one statement that you have made, which is which is something that I like a lot. It doesn't have to be that a sector is doing well, but there could be companies or exemplary companies in the sector who stand out with or without sustainability, but definitely with certain purpose and responsible business. I'd like to sort of drum on that. And thank you for answering all the questions and the session itself. I also want to always thank Faroz, my friend who gives me these opportunities to listen in and to ask the questions. Thank you to Faroz's team, Afif, and all of you who patiently lead us through the technology and testing of these things. And to the audience, apologies to some of you whose questions I couldn't ask. I'm very happy to see 25 published questions for a 15-20-minute session. Looking forward to more such interactive sessions. And with that note, at 3:59, I'll hand over to the team to start closing down. But officially, this session is closed. Thank you again, Jenny, very much. Wonderful and insightful.
You all for the opportunity.
Bye to everybody, and thank you, GCMY, again.